The construction industry is warning of business collapses as labour and material prices continue to soar. The sector was in high demand during the pandemic, but in the last year, construction companies accounted for 26% of businesses becoming insolvent. Laura Jays spoke with Chief Executive Officer of Master Builders Australia, Danita Warren, about the long-term effects it could have on the industry.
Danita, good to see you. We've seen some pretty tough conditions for the building industry over the last couple of years. How are things right now? Have they improved slightly, or are we looking down a pretty tough couple of months ahead?
Unfortunately, the latter, Laura. We've been the canary in the inflationary coal mine, and unfortunately our industry is always the last to improve out of a recession. Our guys have been badly hit by labour costs, labour delays, and of course material costs and material delays, and working with fixed price contracts, meaning that they can't pass those costs on. So it is extraordinarily difficult and tough times. The insolvency rates have been tracking to pre-COVID data, but nevertheless we are seeing a trend upwards, and the industry is giving us an indication that things are worse to come over the next 3 to 6 months. We're hoping that 2023 will be better, but we are certainly concerned as we look at the July figures that will be released in the next week or two in terms of those insolvency figures.
Yeah, indeed. So, I mean, supply chain issues are persisting. I know some of those suppliers have got a little bit easier to get, but not enough.
That's right. I mean, we were very, very lucky in that if we look at 2020, there were no contracts at all. And so certainly we were extraordinarily grateful for the federal and state governments that provided stimulus to the industry so we could continue to employ the 1.3 million people that we employ and keep them working. But nevertheless, when those contracts were signed, they were signed in a situation in which material and labour were plentiful and the costs were low. Unfortunately, 2 years down the track, we've seen escalating costs and delays. We are seeing some alleviation of some of the pressures, particularly in timber and steel, but not enough to alleviate the problem. And as I said, if you're dealing with a fixed price contract, and many of our builders at the moment are building at no margin or building at a loss, and so we're trying whatever we can to ensure that they can trade out of that and we minimise the impact of those insolvencies.
Are you at the Jobs and Skills Summit next week?
Master Builders Australia will be represented by our National President, yes. So we're looking forward to talking about the issues around labour shortages and training, which is of particular concern to us in terms of shortage of trades. And of course IR will be on the agenda, and no doubt it will be an interesting discussion.
What's the outcome that you most want to see? I know migration is part of the answer here to this skills shortage, but in the medium term, what do you want to see around training and investment from government and business?
I think the critical thing is that we need to focus more on training, around flexibility in training, but also ensuring that students coming through the education system are getting the right advice at a careers level before they leave school. Too many times we see many people leaving the education system, and particularly universities, because it's just not right for them. And there are so many alternative pathways, and we certainly strongly encourage trades to meet those skill needs that we need. But also we've got to be more innovative in terms of how we engage with those who are not in the employment market at the moment that do need to be engaged, whether it's people with disabilities, whether it's youth unemployed and so forth. How do we get more people into working in this country? And I think that's going to be an interesting discussion next week.